Not a bad start at all, and enough in the tank in that sense. Let's talk about the next company we have on our radar. Crompton is what we're talking about. It was a soft quarter for the company. Revenue growth has been muted. The lighting business has shown a weak performance, while their ECD and Butterfly margins were under pressure. Mr. Kaleeswaran Arunachalam is the CFO of the company. He's joining us right now to take some questions. Mr. Arunachalam, great to have you with us here. Thank you very much for your time. I believe you've got a conference call with analysts lined up in about 30 minutes from now, actually in about an hour from now. So good that you're speaking with us before that. So I want to start, of course, with, I think, what is top of mind, what will be top of mind, which is, this entire thing with Butterfly, the cancellation of the amalgamation of Butterfly with Crompton. I mean, what happened? What do you think went wrong, and why did people vote against this? And what is going to be the impact, really, in your assessment?
Yeah. Good morning and thank you. To start with, on the Butterfly voting results, we do respect the final outcome that it turned out as it to be. It is important to note that we got the support from largely on the institutional investor side. It is the non-institutional investors where we couldn't garner the support that is required for the merger to go through. And as we stand, when we acquired Butterfly to now, we have been working on two tracks. One is how do we operationally integrate the company? And second is the legal merger of the company. While the legal merger is something that has fallen off at this point of time, the operational merger has been working out successfully for the last 18 months. The cost and revenue synergies that we were supposed to obtain via the Butterfly acquisition will continue to stay true. We don't see any significant challenges coming on that area due to the merger not going through. And as a way forward, at this point of time, we believe we would like to operate these as two separate listed entities, and we will have their way forward charted out accordingly. And we do think from this perspective, we would strive to get all the synergies coming through, and that would also be a great value creation opportunity for both the company shareholders in the future.
Yeah, Mr. Arunachalam, so this was supposed to be supposed to drive focused kind of synergy benefits, especially in the kitchen appliances segment once the amalgamation, etc., went through. You're saying it will have no impact whatsoever? That is one. And second, will you bring this up again? And at some point in the future, does this, or you think it's off the table now?
I'll answer your second question first. It is off the table for now. We are not looking at reinitiating a merger in the near term at all. Considering the individual performances of both these companies in the last 6 to 12 months, and considering that we are able to get the synergy benefits, both on the revenue, which we have started the work almost 6 months back, when we wanted to work on the Crompton's distribution strength to make Butterfly a pan-India brand. We have made early progress in that. We have started with a few markets in North as a pilot. That is going on well, and it is on track. In terms of the cost synergies that we have to obtain with Butterfly, the projects that we have to work through our campaign program of Unnati continues to now encompass Butterfly also. We are seeing synergies coming through on the cost reductions also. So I don't think so there is any challenge on the revenue or cost synergies that we have to obtain with or without the merger. Having said that, there will be very minimal costs that we need to incur for operating Butterfly as a separate listed entity on the statutory side. I don't think so that will come in the way of getting our synergies through.
Okay, got it. So you're not looking to reinitiate the merger anytime soon, and you will continue to operate them as two separate listed entities. Got that. I want to talk a little bit about the other businesses, the lighting business particularly, which has been, on the weaker side. And you did mention in your presentation that you're seeing some demand challenges in the B2C segment. Tell us a little bit about that. When do you see a recovery come through, and what is the expectation for the lighting segment in the second half of the year?
Sure. Let me divide lighting into two parts first. One is on the B2B side and on the B2C side. From a B2B perspective, we are already seeing green shoots coming through. Our progress towards both the MTO business and the MTS business for B2B is on track. We have also obtained two prestigious orders recently for working on the Mumbai coastal line and the Noida International Airport. With that, we think lighting B2B business is going in the right trajectory. Second, on the B2C side, if you look at it, we were probably a market player who started with bulbs and battens as our core category. Now we are expanding into ceiling. Some of the interventions that we have made at this point of time towards lighting business is one, we have got this out from ECD and got a dedicated sales structure for lighting, considering the distribution challenges and opportunities of lighting is significantly different from that of ECD. We think this will bring in the required focus to the category, and it will also ensure that over a period when we start moving towards higher share of business in our categories like ceiling, we should be able to see our B2C business also picking up. Most importantly, I would like to reiterate here, B2C as a segment has been going through price erosions as an industry as a whole. And that is something which is not unique to Crompton. But amidst all these things, the unit economics and financial model of Crompton lighting business has solidified significantly. If you look at our lighting business for Q2, we could expand our EBIT margins by about 250 to 300 bips and also deliver almost a 20% absolute EBITDA growth over last year in spite of softer top line. So our actions, we think, is taking us to the right direction on lighting. Our unit economics are very strong and supporting us towards the initiatives that we need to take to be relevant in the market. And that as a combination of B2B and B2C with the new structure that we have put in place for lighting should help us grow in the coming quarters.
Got that. We'll leave the discussion here for now. Thank you very much for joining in. That's Crompton for you. Moving on to Escorts Kubota. The company